Hello investors, it's Zil from Equitymaster bringing you investing insights to make investing simple and easy to learn. To stay updated on investing trends and the latest developments on Indian markets, don't forget to subscribe to this channel and like this video. The Indian stock market has evolved from the days of physical share certificates to today's digital trading environment. At the core of this transformation are depositories, which are specialized institutions that safely store your securities in electronic form. The two major players present in this space are Central Depository Services Limited, which is CDSL, and National Securities Depository Limited, NSDL. These companies serve as the backbone of India's capital markets, enabling millions of investors to buy, sell and hold securities securely through their demat accounts. In this video, we are going to cover the business model and financial performance of both to understand which is the best depository stock between the CDSL and NSDL. Before we move on, please note this video is for information purposes only. It is not a stock recommendation and should not be treated as such. There is no opinion or view on any stock covered herein. With that disclaimer out of our way, let's get started. Business overview of Central Depository Services Limited. Established in 1997 and operational since 1999, CDSL made history as the first listed depository in the Asia-Pacific region. The company focuses primarily on retail investors offering secure electronic storage and transfer of securities, including equities, bonds, and mutual fund units. With major shareholders like BSE Limited, the company operates through 574 depository participants across India, covering 98% of the country's PIN codes through its digital platforms. Some of the major business highlight of CDSL: market leadership in retail segment. CDSL covers India's demat account landscape with over 152.9 million investors' accounts, capturing nearly 80% market share. This leadership stems from its strategic focus on retail investors. CDSL's retail-first approach has proven highly effective in capturing new account opening. Comprehensive service portfolio. Beyond basic depository services, CDSL offers a wide range of value-added services that enhance investors' experience. These include e-voting for shareholder meetings, m-voting for mobile users, e-locker for document storage, and ECS for consolidated account statement. Strategic subsidiary operations. CDSL has diversified its business through key subsidiaries that complement its core depository services. CDSL Venture Limited operates as a KYC registration agency, providing digitalized KYC services and supporting India's financial institution goals. CDSL Insurance Repository Limited enables electronic storage of insurance policies, while Countrywide Commodity Repository Limited facilitates electronic warehouse receipts for commodities. Extensive distribution network. With 574 depository participants across India, CDSL ensures broad access for investors. This network includes banks, brokers, and financial institutions acting as intermediaries between CDSL and end investor. The company's digital presence reaches 98% of India's PIN codes, ensuring connectivity even in remote regions. Technology-driven competitive advantage. CDSL's success largely stems from its technology-first approach, offering competitive transaction costs and seamless digital integration. The company has invested heavily in user-friendly interfaces and mobile applications that appeal to younger, tech-savvy investors. While CDSL serves the retail investor space, NSDL takes a different approach, focusing primarily on institutional clients and high-value assets. Moving on to National Securities Depository Limited, that is NSDL. NSDL, established in 1996, holds the distinction of being India's first electronic securities depository with national coverage. Prompted by NSC, NSDL focuses primarily on institutional clients. While the company manages fewer demat accounts at 39.45 million compared to CDSL, it dominates in terms of asset value with 464 trillion rupees under custody against CDSL's 70.52 trillion rupees. The company recently launched their IPO with an issue size of 40.1 billion rupees. It's structured entirely as an offer for sale. The proceeds from the IPO will be received solely by the selling shareholders. Business highlights of NSDL. Institutional market dominance. NSDL's business strategy centers on serving institutional clients rather than retail investors, which explains its massive asset base despite fewer demat accounts. The company manages an overwhelming 99.99% of foreign portfolio investor assets and controls approximately 86.81% of total securities by value in India. This institutional focus includes mutual funds, pension funds, insurance companies, and international investors who generally deal in large transaction volumes. While retail accounts generate frequent small transactions, institutional clients provide higher value, more stable revenue streams. Advanced settlement technology leadership. NSDL has been at the forefront of India's trade settlement evolution, successfully implementing faster settlement cycles from T+3 to T+1 and now pioneering T+0 settlement for top stocks in beta phase. The company has also introduced innovative features like UPI-based payment blocks and direct payouts, which streamline transaction processes for investors. Diversified revenue through strategic subsidiaries. NSDL has created multiple revenue streams through well-positioned subsidiaries that leverage its core infrastructure capabilities. NSDL Database Management Limited operates critical government and financial databases, including the Tax Information Network for PAN, TAN applications, ETDS and ETCS filing systems, and the National Pension System. Extensive services network infrastructure. Despite having fewer depository participants compared to CDSL, NSDL operates a significantly larger network of 65,391 DP service centers against CDSL's 18,918 centers. This extensive infrastructure enables deeper market penetration and better service delivery, particularly for the institutional clients who require dedicated relationship management and specialized services. Having examined the business model of both the depositories, let's analyze their financial performance. Let's look at CDSL versus NSDL financial highlights. Revenue. Both depositories have shown consistent revenue growth, but their growth trajectories reflect their different strategic approaches. CDSL has achieved impressive revenue expansion with a 39.5% compounded annual growth rate over 3 years, primarily driven by its dominant retail market position and the post-COVID surge in demat account openings. In contrast, NSDL's revenue is higher than that of CDSL, but the growth rate is lower. It recorded a 17.9% revenue CAGR during the same period. Profitability. Beyond revenue growth, CDSL has done better than NSDL in profitability metrics. CDSL has achieved remarkable EBITDA and PAT growth with 3-year compounded annual growth rates of 32.5% and 30.2% respectively, showing strong operational leverage in its business model. The company maintains a net profit margin above 50%, reflecting robust operational efficiency and the scalable nature of its technology-driven platform. This high margin profile indicates that CDSL can convert revenue growth directly into the bottom line profits without proportional increases in operational costs. NSDL, on the other hand, shows more moderate profitability improvements while operating with significantly lower margins than CDSL. However, NSDL showed signs of recovery in FY25. At the same time, CDSL's return on equity, that is ROE, improved from 28.67% in FY24 to 29.9% in FY25, which is one double than that of NSDL's of 16.36% in FY24 and 17.11% in FY25. Which depository stock is better, CDSL or NSDL? Well, both CDSL and NSDL present different market segments. CDSL shows good financial performance with high profitability margins, stronger revenue growth, and better capital efficiency, driven by its dominant position in the retail participation in the capital market. NSDL, on the other hand, has shown moderate growth but offers greater revenue diversification through its subsidiary operations in payment banking and database management. Both companies will benefit from India's ongoing financialization and digital transformation. But before making any investment decision, investors should carefully assess their own risk appetite and investment objectives. That's it for today. Don't forget to like this video and share it with your friends and family and make them as smart as you are. This is Zil from Equitymaster. Thanks for tuning in.